Alright everyone, Cowboy Trades here. Welcome back to the channel for another update on Bitcoin and the SP500. So we just made a video on the channel talking about the CPI data, talking about how headline CPI year over year came down, core CPI year over year came up, and sticky inflation is still persisting. Now let's see how the markets are responding to this. Let's dive into the Bitcoin and cryptocurrency charts, and more specifically I want to talk about why the bear market isn't over from a updated Elliott wave perspective. Looking at the SP 500, we do have a new wave count and a pattern which I do want to re-update with you. So let's dive right into Bitcoin. As you can see, since our video yesterday talking about how Bitcoin broke 30,000 and how we were heading up to this price target around about 30,750, we've more or less come into contact with this price target. We almost pushed up to 30,600, just $150 behind this price target. Now, this price target may have already been hit. You can look at the 4-hour time frame and you can see that we do have a pretty nasty triple top formation right now playing out, and it does look like we do have a bar pattern making us kind of want to throw back into this triangle around about 28,650. The reason I say this price target may have already been hit is because depending on how you draw the price target, it's slightly ambiguous. You can draw it from here to here, and if we draw this up from the breakout, you can see the price target is a little bit lower, round about 30,600, so we could have almost already hit this one. You can draw it from this point right here up to this point right here, which is pretty much what I've done, although on this one you do have a slightly lower price target just beneath 30,700. So all in all, we've pretty much already hit this price target. Like I said, there is a possibility of a small amount of continuation up to 30,750, but with the lower time frames on the 4-hour looking like it kind of wants to head down, it's not looking too good. We obviously did have that drop in headline inflation that the markets were looking for, but you know, if you look at the S&P 500, we've been rallying into the hopes of this drop. If you look at Bitcoin, Bitcoin was rallying into the CPI. So it seems like the markets may have already fully priced this in, and we may have already hit this price target depending on how you draw it. So that's really all I wanted to update in the lower time frames. They're looking a little bit shaky with this triple top. I don't expect much more continuation above 30,750. And in the immediate short term, I do have my eyes on 28,600. In the higher time frames, you can see the total cryptocurrency market cap has actually reverted right up to the 618 Fibonacci for the past 2 days. Yesterday we tagged it. Today we've got a doji candle showing indecision on what we're going to do with this area right now. If we do come over to the weekly, this is really one of the most important parts, just like this Bitcoin chart that we've been showing you, where we've got major touch points that will support in this box, flipped as resistance, and we may be retesting this box as resistance one more time. The total cryptocurrency market cap is pretty much the exact same. We can draw this same box of resistance right now. This chart looks very similar to what we're seeing in Bitcoin, and we are reverting into this area of resistance and potentially retesting the 618 before one final bear market leg back down to the downside. If we do come over to what happened in the 2015 to 2018 bull run, you can see that after we had our bull market top, we broke back down, and before this final leg to the downside, if I remove these volume profiles, you can see it a little bit easier. Before we had this final leg to the downside, we actually had a bounce and we retested the 618 Fibonacci before heading down. Now, there are some slight dissimilarities with these two. For example, in this market structure, we actually revisited the 786 before touching the 618. Not every market has to line up perfectly, but nonetheless, the last time we had something like this, in 2018, we did retest the 618 fib, confirm it as resistance, and we really confirmed with this rejection on the 618 Fibonacci in 2018 that the bear market was still in play and we had one final leg to the downside. Now, if we flip this in the next few weeks as support and we start moving up, that is a completely different story, but at least in the immediate short term, keep your eyes on this level, round about 1.22 trillion. This level for the total cryptocurrency market cap is extremely important, and this may result in a top in the total cryptocurrency market cap and a top in Bitcoin rolling down from this area, which was previously support flipped as resistance. There's not too much to update in the Bitcoin and cryptocurrency markets other than that. Yesterday we made a 26.5-minute video really taking a deep dive into the Bitcoin TA. So, since then, all of my thoughts are the same. We are having a massive run up at this moment in time. We are completely running away from where the OBV is. If we do line up the OBV, this was one of the major points that I did make in yesterday's video. If we auto fix this to the chart, we normally track the OBV pretty well. The last time that the price action right here took a higher high when the OBV took a lower high, the price actually took a massive tear to the downside. This was about a 22.5% drop because the price diverged from the OBV right here. And we're doing this again. The price is moving up very strongly, but the OBV is actually making a lower high, and the OBV is really not moving too much. We're still making lower highs from this region. So there is a massive divergence right now, a bearish divergence, which is happening where the on-balance volume is looking pretty weak right now, but the price action is running up ahead. That is a telltale sign that this is a bear market rally based on thin liquidity and really a retail driven rally. We know this is a retail driven rally if we come over to the whale wallets. I can't particularly say they're selling into this. Yesterday we had 2025 wallets. Today we had 2018 wallets. Really, you can see since February we had a high, we had a lower high in March, and it may be looking like we're making a lower high in April before coming back down. I do believe whale wallets are going to continue selling off like they have been since the bull market top. However, when we do come over to the Bitcoin ratio of retail to institutional addresses today, and yesterday particularly, they pushed up to a new all-time high. So this is really right now a retail driven rally. And just like we talked about before, when we looked at the OBV, this is not only a retail driven rally, this is a retail driven rally not supported by institutional money, not supported by smart money. This is really based on retail volume and a lack of greater market liquidity. When we're looking at the on-balance volume, it is heading down. There's not a lot of liquidity available in the markets right now. Liquidity is very anemic, very thin, and because of this thin spread of liquidity, a small amount of retail volume seems to be driving the price action up quite strongly. So that's really all I wanted to update on the Bitcoin and cryptocurrency market front. Let's head over to the SP 500 before we do dive into our new Elliott wave count and update this technical analysis pattern we have been keeping our eyes on. I did just want to quickly let you know that the VVIX, it was up a little bit earlier today. It's coming down at this moment in time, but still holding this 786 Fibonacci. This is really the lower time frames, not the biggest thing you need to keep your eyes on. What I personally got my eyes on right now is the VIX. If we do look at the VIX, once again, we are coming down to this major support box that we have been bouncing off since the bull market top for the S&P 500 back in January of 2022. You can see every time the VIX on the top of the screen comes into confluence with this box down here, the VIX has a huge tear to the upside and the S&P 500 takes a huge tear to the downside. Now, while the VIX has more or less just been coming into contact with this box, not really making higher highs, not really making, too many higher lows, we have been making higher lows. We're still having major higher lows since this bull market top for the S&P 500 in January of 2022. But really what the VIX has been doing is just kind of coming back into contact with this box, and every time it comes into contact it has a bounce, and whether the top of the VIX has a lower high or not, the S&P 500 takes a huge tear to the downside and pretty much always comes into confluence with a lower high in the markets. Now, bar this one data point over here, because we have had a higher high from this data point, it is looking like once again the VIX is going to come into contact with this box, take a huge tear to the upside, and this is going to come into confluence with another move to the downside for the S&P 500. Just wanted to update you on what I've got my eyes on over here for the VIX. Let's now head over to the S&P 500, where I wanted to update this Elliott wave theory. Now, we have been looking at this pattern over here on the channel. We did redraw this one. We originally had it drawn to this data point. We discussed that this was a throw over, and this is why we had such a brutal move back down to the downside. But after looking at the lower time frames, well, still looking at the same chart, heading over to the daily, when I'm looking at these individual wave counts, it makes more sense to me to draw it this way now, and this may be marking the top according to this falling market asymmetrical triangle. Now, First of all, let's dive into the lower time frame daily and look at the individual wave count. You can see since the bull market top for the S&P 500, we've had a beautiful 1, 2, 3, 4, 5 wave. ABC bounced into another 1, 2, 3, 4, 5 wave, and this is where things get interesting. We had a bounce, an ABC, up to this market structure over here. Now, with every ABC we've had in this market, you can see we topped out C wave round about 4,600 for the S&P 500. We topped out this C wave on the S&P 500 round about 4,300. We topped out this C wave round about 4,200. And I'm going to be making the argument in a moment that this C wave has just topped out at 4,150 for the S&P 500. But with that, you can see we did have a rally into the start of this asymmetrical triangle up at wave C. And this is where this pattern starts to have a very, very strong confluence. Now let's continue with this lower time frame one first before we do dive into the broader structure for this pattern. If we do look at this one over here, you can see since we formed the pattern at the top here, we had a 1, 2, 3, 4, 5 bearish wave count down to the bottom of this asymmetrical triangle. Then we had a brutal ABC bounce up, forming the top of this market over here. We then had a 1, 2, 3, 4, 5 wave coming down to the bottom, once again forming wave D of this pattern over here. And quite recently, obviously because we've completed this 5 wave to the downside, we've had an ABC back up. Now, we may be, if I clear this up, we may be putting in a double top for the S&P 500 right now. You can see that after we've had this very, very clear ABC wave, I mean, if I clear this up, just to make it a little bit clearer for you to see, I mean, this bottom here, we had a very sharp rally up here. We had a major correction back down to here, and we've had a pump back up to this wave over here. In fact, if we draw our Fibonacci's from here to here, we more or less beautifully retested the 618 Fibonacci when we did come back down for wave B. If we draw it to the candle body close, you can see a perfect retest of the 0.5 Fibonacci coming into the golden ratio. So with this individual wave count, looking at the much lower time frames, looking at the individual ebbs and flows of the market, it is pretty much looking like that we are topping out another C wave, making a lower high on the ABC correctory wave structure of this Elliott wave bear market. Now, with this, you can see that we are once again, at the top of this asymmetrical triangle. And if we come over to this chart and look a slightly more macro picture, now over here, we've been counting all of the small moves like 1, 2, 3, 4, 5 ABC. Over here, we're looking at large moves. This is much more picturesque when we're looking at the weekly time frame. So you can see we've had a brutal 1, 2, 3, 4, 5 Elliott wave count, and then this is where we've started to form this asymmetrical triangle. We moved up into the top of the asymmetrical triangle where we came up to A, we came back down for B, we came up to the top of this pattern for C, D, and E. Now, we originally had C drawn here, but like I said, when we do come into the individual wave count, this is looking, much more promising than the initial drawing and the initial trend line that we did have. This would also explain the throw over. Maybe this wasn't a throw over. Regardless, the initial trend line, we did have a throw over from this, and we did have a brutal move to the downside. So this may still be valid as the throw over pattern, but nonetheless, I really want to focus on this new drawing of the asymmetrical triangle. Now, if you didn't know, these asymmetrical triangles, these are sometimes called 5-wave asymmetrical triangles in Elliott wave theory. In a falling market, also known as a bear market, this is a continuation pattern. So you can see as you break down into the bottom of this, you pump up to the top, forming wave A, B, C, D, and wave E is where you top out in terms of the asymmetrical triangle. And this is where you continue in the same direction that you broke into. Now, in a rising market, in a bull market, you can see when you break into these patterns, typically they're continuation patterns, and it's kind of the same but flipped on its head. Of course, in the higher time frames, if we come over to the weekly, we can clearly see that we didn't pump into this asymmetrical triangle. We formed a beautiful 5-wave before coming into this ABCDE formation. So according to this asymmetrical triangle, we should be topping out on wave E very soon. If we haven't already, really the top of this is once again 4,154, which we actually beautifully tagged today, just when the CPI came out. We literally almost to the exact dollar touched the top of this trend line, and we may now be topping out for this Elliott wave theory. So that's really what I wanted to update you on. In the lower time frames, we are topping out on a ABC correctory wave, and in the higher time frames, this asymmetrical triangle may have just topped out on wave E, and we may be getting ready for that next leg back down to the downside for the S&P 500. So for today, my friends, that's all I've got. As always, if you do enjoy my content, let me know down below by leaving a like and a comment. Share the videos with your friends. If you want a deeper dive into what happened earlier with all of the CPI numbers, sticky inflation, headline inflation, CPI index, core inflation, then be sure to check out my video I posted earlier, Sticky Inflation Persists. As always, if you do enjoy the content, let me know down below by leaving a like and a comment. Share the videos with your friends. If you want to further support the channel, feel free to click the join button and become a member today. Head over to my Twitter where you can catch up with my economic data and other charts which don't make it over onto my YouTube. So this is kind of like my YouTube 2.0. A lot of charts on here do get posted before my YouTube, or they get posted and they never reach my YouTube. So this is definitely a good place to catch my extra posts at 618_cowboy. That's all I got for you today, my friends. It's been your boy Cowboy Trades. I'm out. Peace.